This session is going to be very different. It's going to be 60% is going to be responses from you, 40% is my talking, and my talking is going to be only questions. And I'm going to ask each one of you at random to answer whatever you have learned or heard over the last 3 days or 3.5 days. So let's start with, before I get into the mode of asking questions, better if you respond proactively. Anyone? What is your thought? What is the feeling you got when you saw the indirect tax laws over the last so many sessions? You have about 7 sessions already.
My immediate feeling is that in the initial years, it will be very harsh on the business community and the professionals to comply with so many procedural requirements. But going forward, when the things will streamline, it will be bringing reasonable.
Should be, okay. Harsh on the business and professionals, compliance challenges, but it should streamline after a few years. Any other thoughts?
Quite a complicated, it will be quite complicated.
It will?
Going to be quite complicated.
Complicated, okay.
It's a big opportunity.
Large opportunity for consultants and professionals. Yes, it's a time to make money in 100 rupee notes.
100 rupee
Any else? Any other thoughts?
Golden opportunity of a good law has been fitted up.
Golden opportunity of a good law fitted away. Yes. Any other thoughts?
Read the words of the 3 laws.
Worst of all 3 laws.
Worst of all things.
Taking all the worst provisions from all the laws, putting it into a basket, and then making a juice out of bitter good, right? Okay. I think we are I would quite tend to agree with that. In fact, my personal view is that we seem to have lost the best opportunity to make a phenomenal law. On a scale of 1 to 10, the modern GST law, which I am seeing, and I am told that yesterday the final GST law was released to the states, and from the reactions I have heard, I have not had a chance to look at it, but from what I am told that there is not much change, it's as bad as it was earlier. So I think on a scale of 1 to 10, I would really rate this law unfortunately only at 4. 10 being the best, 4 being the 1 being the worst, and this is really not taking us anywhere. If you really analyze, and I'm sure it would have struck you when you really saw and studied the provisions, it does something good for manufacturing. It doesn't really help too much when it comes to services. So I think there it's quite lopsided. Manufacturing may be better off because they're saying fine, from the 4 laws I go into a single law, and it's a little easy to comply with. You're used to complying and undertaking your business in a particular manner, so it simplifies life. Services, you are doing the complete reverse. You're taking service from one single law into a dual law, and then you're going to split it into the 36 states and union territories, and therefore that level of complexity really increases. So when you really go to implement GST, and here what we're going to talk today is to say that how are you going to implement GST more from the perspective of the law coming into our country, and for us, as Madam said, a professional opportunity. How are we going to really implement this for our clients? And you'll really find that when we really move into this implementation, there are so many areas of the business which is going to be impacted. So does anyone want to take a guess? I put it all on the slide, but you need to really then help me with this. So what are the various areas of businesses or the business functions which will really get impacted because of GST? Compliances? Documentation is, okay, let me rephrase my question. What are the various teams or the divisions of a business which might get impacted?
Purchase department, distribution.
Procurement, distribution, IT, infrastructure, that's IT, finance, yes, go on. Legal drafting, yes.
HR.
Working capital is part of finance, yes.
Cash trading will stop.
Cash trading will stop, do you really think so? Come on, you are underestimating the Indian. So I heard about a story, and I don't know whether it's true, that they caught some officials taking a bribe yesterday, 3 lakh rupees in Gujarat, which were in 2,000 rupee notes. So someone obviously has a big lot of those notes already. So
sir, I have been given tip off that they are not demanding gold coins.
They demand in gold coins, so bribing kind. Yes. Incidentally, that also gets taxed now. Well, so in a way, these are all the functions which are going to be impacted. First, obviously, tax, finance, and accounting. This is going to be the team which is going to perhaps do the largest amount of work in terms of the mental mathematics, the mental calculations, the changes which are required in your business. So that's the team which is going to be most concerned about business. The next team which is going to be concerned, the business processes, the business teams themselves. Because these processes are going to change, a lot of transactions change. How do you do business completely undergoes a change. And GST, if we ever thought is a tax issue, it's not. Tax is the last. Everything else is going to overtake and come first. So the tax function, accounting, finance is effectively going to only help or support the whole entity to really roll out GST or implement GST, right? Then you will have supply chain. Big challenges for supply chain team. How do you really want to sell? How do you want to market? And we have pointers we are going to discuss. For each of these, we are going to have one slide. I would have thought of 5 points. I'm expecting another 50 points from this group, and that's where I'm going to raise questions and I'm going to ask people at random to give us some ideas. And if you wish, we can maybe put together a small document which says these are the areas which we as a group identified as challenges for implementation for businesses, and we can then circulate it amongst all the participants over here. So that becomes a reference point when you are going to provide or support your clients, when you're going to help your clients and work with them. So supply chain is something which is going to undergo change. Right? Then IT, we already mentioned IT, so that's the next team which is going to be really worried about GST. What about human resources? Will the HR team be concerned with GST? Yes. Yes. There will be areas for changes for HR team and some work for them as well. Yeah. But we are simply talking about businesses. What about the government? Are they really worried? No. On the looks of it, no. But I think they really are. And of course, the first amongst the various government departments or the various government entities which will be concerned with GST obviously is the GST network. They are the guys who are going to run this whole platform, the platform which is going to really run the show for the next 30 years or so, until we have GST 2. But these are the guys who are going to run, and therefore that's a big change and a big platform to be set up and implemented by them. And obviously, the next is state governments. The state governments need to roll this out. Biggest problem for the state governments, they are losing powers. And they are trying very hard not to lose powers. So, I think they are also being conscious. They are being very careful to see what kind of provisions are made, what are the assessment provisions, what are the taxing provisions, what leeway do we have in making changes, and that's what they are concerned about. And finally, obviously, the central government. Central government, because it's said that any government which has introduced GST has never been re-elected except in Australia. And I happened to be with one of the ministers of state in the finance ministry, and that statement was made and he said, yes, I remember this, we need to be careful about it. So they are quite conscious about this as well. So if we go a little ahead and see what are the challenges in the framework, and here I am effectively going to only list down what you have learned or what you have discussed over the last 7 sessions. What are the challenges in the framework which could become a problem when we are going to talk about implementing GST? And here, at this point in time, I am still talking about implementing GST in a business, for a business entity, we helping our clients implement GST. So what is going to be the framework challenges? The framework itself presents lots of issues, lots of open areas which we are not sure how to deal with. If I simply classify this into 5 or 6 baskets, there's going to be the problem of supply. What do you mean by supply? And that's what you're going to obviously look at. How do you value? Where do I pay my taxes? In fact, you must have already studied that there are some definitions which are completely missing in the model GST law. So until those definitions are really introduced, this is not going to be working at all. What is the place of supply? Because the place of supply will enable you to determine where the transaction takes place, how you need to tax it, in the sense, what kind of taxes need to be levied. So what's the place of supply? Your classification issues, and of course some other challenges as well. So this is nothing new, but you need to help me to fill in more blanks and boxes as we go on. So I'll start, and then that's where you're going to start answering in a little while. The first question, very simple. What do you mean by supply? What is the coverage of the word supply? What does it include? Of course, we are talking about supply of goods, supply of services, or both, and you have already discussed this. So this is the first question which is going to come to our mind in the framework. What do you mean by supply? And more fundamentally, the question is, can there be a self-supply? Does it require two people? Do these two people need to be separate persons, or at least two separate legal entities? Or can it be a single entity? And we have already discussed this. So this is the first issue which is going to come to our mind, right? And as you go further, the second question is free supply. For the first time, we are introducing a concept of levy of tax on something which is free. And therefore, when on a free supply, obviously, a big question when you really go to implement GST, which are the transactions which could get tracked? 1 plus 1 free, you have a problem. What about a donation? Donation is a free supply because I'm going to donate something to somebody and I'm not going to charge a consideration for that. And is the government really intending to say that you need to levy tax on donations or gifts for that matter? Do you really want to levy tax on these transactions? Right? So these are again questions which are going to be arising. The next is, of course, if I look at free supply, one or two more examples. Yes. It's not saying whether or not the furtherance of business, if I understand. I'll look that up. To my mind, it doesn't say when it comes to Schedule 1 in the course of a furtherance of business.
Last line, fifth one says.
In the course of?
In the course of furtherance.
It does. Okay, let me just check that and come back to you. Maybe I'll have a look. But to my mind, the way I read it earlier, and maybe I've overlooked this point, where there's section 3, where it is Schedule 1, it does fall within this particular definition.
Initially, when I was in
I'll double check that, but I'll just double check that, but I think it is perhaps getting covered. Now there could be a lot of other instances where you are going to be trapped. For example, you want to construct a building, okay, and you engage a contractor and you provide free cement and steel. Is this a supply? Yes or no? Yes. And therefore you need to pay tax on it, right? And what happens when the contractor in turn really invoices you for the construction activity? You studied this, valuation. Everybody's nodding their heads, I'm not getting answers. Come on.
Yes.
What yes? Yes. Taxable, not taxable? Taxable. We said anything supplied free, you need to add it to the value of the goods or services and you need to levy tax on it, right? So then you are going to obviously start looking at these situations to say where is there a free supply? In a free supply, is there a need for valuing and then on both sides, okay? But as you go further, you will be confronted with many transactions which are a little bizarre. You have bought a new transformer for 1 crore. You get an engineer to come and install the transformer for you, which is going to cost you 3.5 lakh rupees. Installation charges. Is this a supply of the transformer to the installation contractor or the engineer? Should you say that you should levy tax on 1 crore because you handed over the transformer to him and then he installed the transformer and therefore he should levy tax on 1 crore 3,50,000 rupees? Or will you say there is no supply?
As per contract.
Everything is as per contract. Sir, now we are not looking at the contract at all. No, I bought the transformer from a third party. So this is not that case. So whether this constitutes a free supply, and why I am giving all these examples, the whole idea of giving these examples is to give you some idea of what could be the transactions. Now as I said, I may be able to think of 5 examples, you will come up with 50 of them. But those are the examples you have to look for when you are talking to your clients, when you are looking to implement GST for your clients. And these are the examples which will be relevant to say, how do I really classify these transactions? How do I value those transactions? Do I need to pay tax? What happens to my credits? So that's again an element. Now again, I think everybody found it very easy to agree with me when we said my cement and steel is taxable. But you found it a little difficult to agree when you said my transformer needs to be taxed. Why? If you are saying free supply is going to be taxable, then I should be also paying tax on my transformer. And that's where you'll get into a little bit of a legal aspect. To say what is the nature of the contract? What is the nature of my supply or my service? Why is one is construction, which obviously cannot be undertaken or which requires the use of cement and steel, and therefore the cement and the steel is an ingredient in a way, so to put, for providing the construction services. But in the case of an installation, you might say that yes, this is the core of the whole service. I'm actually providing a service in relation to a particular object, and therefore that's not a supply really which is made to me. Now again, we get into supplies, we get into the laws or the case laws which are there in UK, in Australia, and then we'll have to then at some point in time start interpreting all of these. But when you're going and helping your clients, be open to this, start looking at these examples and these instances. Self-supply. We studied this, schedule 1, entry something, 2 or 3 or something. Right? What did it say? Business assets put to private use. So business assets put to private use or private or personal use, or supply of services put to a personal use, right? So what are the examples of self-supply? Come on. Now is the Q&A starting. Anyone? I want 2 examples. Self-supply.
A hotel, person owning a hotel residing in one of the rooms.
Person owning hotel residing in one of the rooms. I'll twist it a little bit. Person owning hotel allowing the general manager to stay in the hotel, which is always done, and therefore you have a hotel client, you need to value that. And you need to see whether it's residential accommodation or is it hotel service. You might see an exemption coming on residential accommodation, then you may not have to worry about, but you have an impact on input tax credit, as Bharat explained to you. But if it's going to be taxable, then you need to pay tax on the fair market value of that particular service, right? So that's one example. Anything else? Sorry?
Steam generated, consumed by the
Steam generated and consumed.
during the manufacturing.
It is actually used in the manufacturing process. I am not sure whether that constitutes a self-supply. Within the same factory.
Captive consumption.
Captive consumption. I never thought about captive consumption being a self-supply, but this is something I need to really think. That's a good point. So I need to really think on that. Yes, but my impression that that may not really be covered, but let me just certainly note it down. Yeah.
And so free supply indicates it has to be with a contract, because the problem is pharma company is distributing certain things to the doctors, like writing pads, pens, etc.
It's so broadly worded. It doesn't say, if I remember correctly, it doesn't say anything about a contract. And then my
No, then
house,
it is valuation part would come, isn't it?
the valuation part will come. Then they're saying, well, then you have to apply those valuation rules. The comparable price, computed value, of the residual value.
Comparable price, etc. is only to the related party, or it is a transactional value?
No, where there is no value, you have to look at section
So
15.
then I, for value, I am just doing it 1 rupee when I clear.
Comparable value, like section 15.4, you have to go to the valuation rules. And then you have to find a comparable value for it. Let me give you 1 or 2 examples which can take this whole discussion to a different level of absurdity. The company gives you a laptop. Over the weekend, you use your laptop to order a pair of shoes on Flipkart. Is it application of a business asset for a personal or non-business use? I think that's the phrase which is there, right?
Yes.
So, will we get trapped over there? Sorry, temporary application of business assets to a private or non-business use. Yes, technically, you will say it is application of a business asset to a private or non-business use. Now, does the government really intend to do this and say, now I need to put a value to it and then pay GST on it? What happens to my director's car? My director comes to office 5 days a week, 2 days a week, over the weekend he's at home, he uses for his personal use. Is the company providing a service by allowing the director to use his car for personal purposes? Are you saying I need to value this? You might put some value for, maybe for income tax purposes as a purpose value, though it's not for directors, but that's completely different as compared in comparison to what you're really saying or what you're providing under the GST law. But these are the kind of examples which could get trapped, and I'm not saying they will. We hopefully will see them caveating this, and in many countries you will find that provisions say that if there is something which is put to personal use below a certain threshold value, then it's not required to be taxed. India, we are Aryabhats, we invented the zero. For us, anything which is there has to be taxed. So I think we have gone into the other extreme of the whole gamut to say you should have put a value, you should know what's a value, and therefore you need to levy a tax on it. Right?
One question.
Yes.
Company giving anything to the director, can it come under the employee-employee relationship and not covering within the definition
supply is only service provided by an employer to an employee. It's not the other way around. The exemption, which is there in the definition.
Company is giving a car to the director
Correct.
or a laptop to the director. So that isn't your company is providing those services to the director or the employee.
Right.
Now, so when we say that giving that to the employee covers into that employer-employee relation and it falls out of the definition of the plans.
Sure.
raising a query.
Right. Valid question. The exclusion which says what is a service under section 3 says services provided by an employer to a company or the employee. My apologies. Services provided by an employee to an employer is not a service, not liable. It doesn't cover the reverse scenario. It doesn't cover the reverse scenario. Therefore, you will really end up in a situation to say subsidized lunch provided to employees is going to be liable, and I think in most cases people pay already. Free transportation provided to the employee is going to be liable because it's going to be a supply, and therefore all of these are going to be liable for tax. So again, these are the kinds of transactions you have to pick and choose, you have to identify, and you will find a pay slip which says most manufacturing companies, a pay slip which says 10 rupees a month deducted for lunch, right? And now on that 10 rupees you need to pay tax. Now the question is, and which is apparently the valuation rules don't cover, do you need to fair value them or do you need to just pay tax on the 10 rupees? Because the valuation rule provides a situation where you are giving something free or without a consideration. It doesn't say what do I do if I am providing at an absurd discount, like a 99% discount or a 90% discount. It doesn't cover that. But there is another clause which says rejection of value. So again, that's something which you need to think of. Let's go ahead. We are going to cover all of this in a little while. Inter-unit supplies. Any thoughts on inter-unit supplies? Come on, we discuss this.
Maybe taxable.
Taxable. Give me examples. Branch transfer of
What is this?
goods.
Maybe assets. Maybe even assets.
Goods, assets, stationery, everything. Services. Can there be something called branch transfer of services?
Absolutely.
Yes. Examples?
Allocation of cost.
Cost allocations. Cost allocations. Fine. Maybe.
Consultant of particular branch or like a tax guy handling the branch of Mumbai, providing services to the Delhi persons also. Like they are handling their tax.
So the consultant in Mumbai providing service.
Not a consultant, employee who look after the tax matters in Mumbai.
So you are saying the centralized tax function taking care of the tax compliance is all over India. Is there a inter-unit service? Yes. Is it? Is it not?
Yes.
It is. How do you value it? Problem. It is. The way it's worded, we are taking it to a new level of absurdity. We are saying inter-unit services are going to be liable for tax. Now, what do you mean by inter-unit services? Inter-unit services, as you explained, your centralized tax function, centralized accounting function, we are saying you need to cross-charge it. But if I cross-charge this, there could be something which my branch does for me, which they need to cross-charge back to me, and it may create a circular reference because my cost goes into their cost base, which they need to charge back. So how do I really value or really implement this provision at all? What happens to my central HR function? The HR function really is deciding HR policies, promotion, recruitments, evaluations. Are you saying my HR function is a centralized function which is providing services to my 20 factories across India and I need to start cross-charging? Apparently that is their intention. Though it seemed too good to be true or too bad to be true, we inquired with the department and said, yes, you need to cross-charge this. But there will be so many instances where it's practically impossible to really identify whether there is a service or whether there is an activity provided between two offices. Let me give you an example. You are a manufacturer of steel. You are having your plant in MP. You sell all the steel from MP and you have a stockyard in many other locations also. You have your Mumbai office where branch manager or your marketing person in Mumbai goes and gets an order and then passes that order on to your MP factory. The sale is made from MP to say directly to West Bengal, right? Now, are you saying that my branch manager has provided a marketing service to my MP factory, and I should now identify this marketing service, put a value to it, and my branch in Mumbai should really cross-check my MP factory? Is this really the intention? Will you call this a supply? But the minute you are going into that clause 5, which talks about supply of goods or services by one taxable person to another taxable or non-taxable person, and then you are defining taxable person as anyone who has a separate registration, so to speak, though it's not so clearly worded, effectively that's where you get into it. And it's going to be humongous. You might have a bank manager who sells a credit card, convinces his account holder to take a credit card in Guwahati. You issue the credit card from Mumbai, and are you saying now this is a marketing of a credit card which is a service provided by the Guwahati branch to Mumbai branch, and therefore State Bank needs to raise an invoice on itself? It just cannot go. The government is not seeming to be realizing this. Well, without getting into that, because if you get me started on that, I'll never end and never stop. These other kind of transactions you really find a challenge. Now, unless this provision is really amended, you might have to start thinking about these transactions. Well, in your evaluation, you might have a list of 25 transactions. You might eliminate a few, but you will be still stuck with a few transactions which you need to then impute a value and pay that GST on their own. And obviously, then the next question will come is that how do you claim your credits? To what extent credits are available in the receiving state? Agency transactions, I think you've already seen. Supply of goods or services between an agent and a principal are liable for GST. If you are doing transactions through an agent, you need to again recast, reevaluate, and that's where you, as a consultant, as a business, the tax person, you're going to look into it. Let's move a little faster. Then you're going to look at valuation. You already looked at inclusions, exclusions. The whole valuation rules are in a way not workable because the present valuation rules are completely modeled around the customs law. Now that's when you really import goods into the country. That really will never work when you're talking about any domestic transactions, because you end up having a lot of double taxation. Well, the answer we've got is that we're going to remodel the valuation rules. So maybe in the new draft, we'll see so many different valuation rules coming through. Related party transactions. You already saw this, that for related party transactions, you need to benchmark it with an arm's length principle. You are in a way saying that you need to introduce some sort of a concept of a transfer pricing, and then you need to see whether it's going to be the comparable computer method, and how do you really satisfy the authorities that the transaction value is a fair value. So again, that's something which you're going to be facing a challenge. I'm only summarizing what you've studied. I'm not really refreshing anything, but I'm just listing all of this down. That's all. Yeah.
Well, GST perspective, one will be from custom perspective, one will be from income tax perspective.
Transfer pricing perspective.
So many.
We're creating more work for professionals.
More probably this will be on the custom related issues. Like
as of now, the valuation rules talk about customs, though I think there will be some dilution because this will not really work at all. Because there is no way to really put a value to so many transactions. Next is special valuation provisions. You have a lot of provisions which are going to be subject to special valuation. Insurance is going to be special valuation. FX transactions, and there's a whole list of those. Air travel agents, all those kind of special valuation provisions are going to come in. So when you're going to talk to your clients, when you're going to look at the businesses, bear in mind the special valuation provisions which also need to be looked at, and how you need to value. Bear in mind, most importantly, that you might have certain composition schemes, which is an alternative method of paying taxes. But if you are going to compute your ratio for reversal, you need to take the special valuation rule to determine the value and not the composition scheme. So for example, the simplest thing which comes to my mind is for foreign exchange transactions, they say that the value is your RBI buy sell rate minus buy rate, that's your value on which you need to pay GST. But you might still have a composition scheme which says you need to pay at certain slab rates. Now if there is an exemption on certain transactions, while you pay tax on the output side under the composition scheme, your value for taxable or exempt supply still has to be according to the valuation rules. So you might really end up having two separate sets of calculations to be done for your credit purposes and for your valuation purposes. On the other hand, your output liability will be discharged on a completely different method. So again, that's going to be a dichotomy. Certain reconciliations are required to be maintained for that. And of course, last is there are provisions for rejection of value of supplies. I think we are going to face that in most of the situations. Appropriate state. Where do I need to pay my tax? Appropriate state means the state from where any supplies are made, supply of goods or services. And therefore that's the state where you need to pay a tax. And I think when you discuss the place of supply, you would have discussed that it says you need to pay tax from where the supply is made, while they have provided a definition of location of the service provider. they have not provided a definition of location of supplier of goods. They are going to introduce that provision. So again, that's something which will come in. But in the meantime, until a clear distinction is made or a clear provision is made, you might have a dichotomy to say, is it the state of dispatch where I should pay my taxes, or should I pay my taxes from the state when I'm contracting? Because I can have a contract in Mumbai, but I may be dispatching the goods from my factory or my warehouse in Cochin. And therefore, these could be the two locations where you could potentially see there is a provision of a service or a supplier of goods or services. For services, again, you have lots of transactions, and I can give you one or two simple examples. You might have a NBFC where you receive a loan application in Ahmedabad, you process it in your office in Gurgaon, and you disburse the loan from your branch in Chennai. Where did I provide my service from? On the loan processing fee which I received of 10,000 rupees, should I pay my tax in Gujarat, Gurgaon, or in Chennai? Again, those disputes are going to arise, which is really talking about multi-unit supplies or multi-state supplies, where multiple units are going to be involved or multiple states are going to be involved. So again, that's again a challenge when you're going to really start implementing and thinking about GST. The next is, of course, inter-unit supplies. We already talked about that, so we just skip over this. Next is place of supply. I think place of supply you already covered. So, but this is an issue which you need to look at. Which are the goods, for services? How do you determine the place of supply? There are some provisions which are not really easy to implement, and therefore we need to look out for those. I think that's something which you already gone through, so I'm not going to spend too much time. And then there's an issue between classification between goods and services. And you said that there is a schedule which says which transaction shall be transactions of goods, which transaction shall be transactions of services, and you need to accordingly classify. Your dispute doesn't go away to say whether a transaction is really goods or services. While they have tried to classify, there are some transactions which will still fall a little on the border because they have not made a special provision for that. So again, you have to be careful while trying to classify the transaction. You should not fall into a trap to say that really should have paid tax at a different rate. And of course, the last issues regarding compliance across India, assessments and audits. You comply across India, file your 36 states, 36 returns. You have your audits, assessments, all which is going to be across India. Of course, last is the procedural and the transaction provision. So I think, in a way, this is what we have really covered over the last 7 sessions. I am not talking anything new. Does anyone have any examples or new issues, new thoughts, new instances which we think we need to add into the slide? Anyone? Am I going too fast? Am I going too slow?
Sir,
is it too boring? Is it?
I am still confused about one thing.
What is this?
No.
Yes.
Sir, will there be a difference of completely exempted items and zero-rated items in GST as it is prevalent in VAT? This I want to.
Will there be a difference as in? The difference should treat, how do you treat zero-rated versus
completely tax-exempted items or services?
Yes, of course.
Okay.
A zero-rated is any supply from which you still get your income tax credit, although you don't pay tax on the output side. Okay. Exempted supply is one where you don't pay tax on the output, and therefore the corresponding credit is also denied.
Yeah. So same thing will continue in GST framework.
We still have both the concepts in GST framework, an exemption as well as zero-rated. Okay. As of now, we have said that exports are going to be zero-rated. However, if you might have heard the finance minister, he said 50% of the items in the CPI, the consumer price index, would be zero-rated. So they will probably look at zero-rating all your daily essentials, your fruits and vegetables.
Sir, my worry is always, I'm coming to a very specific, and I make kindly use educational books.
Educational
books.
Yeah.
Let's say up to 10 standard or whatever, high school. So, under what category will you classify?
I don't have a crystal ball yet. No idea. This because they have not shared. I don't think they have finalized the list as well. Okay. So we'll have to just wait for that. Yeah.
Apart from all this income tax credit will also have a lot of issues because then you have the USP and the set-off not available against it.
Yes, of course. Income tax credit would be an area of concern. And when you're going to look at you're right. I'm not put that specifically here, but that's going to be a major area. The biggest problem is that fact, there was one discussion which we had. We said, how much would you really save by providing those crazy denials of input tax credit? Outdoor catering, employee insurance, 500 crores, 1000 crores? And what is the cost of litigation it is creating? As of today, we have litigation worth 500 crores or 1000 crores. Is it really worth having these provisions? And there were some people, we actually put this across to the ministry, and some people understood. Some people are saying, "Nahi, kuch to masti karna chahiye." So effectively, they said we should leave something there. So I think it's just crazy, but that's why I'm saying we are not achieving the full potential. By putting all these small provisions, which is not going to cost the government anything, you are really creating so many distortions. You will find one more distortion. Entertainment tax need to be levied by municipal authorities, right? We started because we needed in the northeast. You go and check the collection of entertainment tax. Someone told me, and I have not really checked, that it's less than 50 crores. But even if it is 500 crores, is it worth creating a distortion in the whole constitution? Why? Just compensate them 500 crores and finish it off. Now you have given an avenue for all municipal corporations to start introducing entertainment tax. So instead of subsuming taxes, you are giving a new opportunity. So this is a thoughtless kind of provisions we are getting into, and that's why I still feel 4 out of 10 so far. We could have been 10 out of 10 and shown something to the world that this is something dramatically different, dramatically progressive. We are not getting there. Sorry, we are not. Let's look at impact on businesses, and here what we are going to do, we are going to look at each of your functions and what each of the functions are going to look at. And here we will not be able to, for each of these line items, we will not be able to say what they are going to do, but what areas they are going to examine. And that's your issues which you need to look at, your challenges in implementation, that's what they are going to look at. So far as the tax, accounting and finance function, and that's obviously the function which is going to be the first, is going to really start looking and preparing for the implementation of GST. The first they are going to obviously look at is all your primary transactions. What are my primary transactions? What are my supply of goods, supply of services? How do I levy my tax on it? What are my rates? When is it local, interstate, whatever it may be. So that's a very simple given. There's no problem on that, right? The second, obviously, we're going to start looking at is my secondary or supplementary transactions. All the supplementary transactions, hidden transactions, netting off, exchanges, buybacks. You need to start reading out all of these and saying, am I required to now account for this separately, report it differently, levy tax on it, pay tax on it, though I don't levy? And that's something which they are going to start looking at, right? Is that right or not? So these are the kind of transactions you need to look at. Now there could be so many transactions which you need to evolve, you need to examine. What about warranty supplies? What about additional warranty? Is this a separate transaction? Is it an additional supply? How do you tax it? If I say I don't have to tax it, do I get my credits? So in your whole chain of the activities which you do or which your client does, what we have to do is really start plotting, not transactions and revenues, because that's secondary. You have to start plotting the activities which you do. And you start doing this by having interviews. Doing this by having interviews with your clients, with the various business teams. You say, what do you do in your day, in your week, in your month? And you will find somewhere, sir, I also do this. I will also issue credit notes for something. And then you realize there's a problem somewhere. And that's where you have to start weeding out all these kinds of transactions and these small instances which are going to be creating a problem. Now you will find that the value of these transactions may be 10 or 15%. They're going to take 80% or 70% of your time when you go to implementing GST. Because your primary transactions are very simple, they are there, they are recorded, and therefore you do not have a problem. Your larger problem is going to be those small transactions which you need to look at. You look at bundle supplies. If it's a bundle supply, is there a concept? Is there no concept on bundle supply? How do you really tax it? And therefore that's something which you need to start looking at. Next is obviously classification. Once you have identified what are all your transactions, you need to start classifying those. Is it goods? Is it services? How do you really pay my tax? And going into that, you are going to look at your time of supply. What is my time of supply for each of these transactions? Now you will have a problem particularly on these buybacks, repairs, warranty, replacements, exchange. All these transactions will become a problem. Freebies. What happens if I suddenly have a voucher for a recharge which is 100 rupees and a scheme is announced that if I use this code and recharge it, I'll suddenly get 120 rupees. who is going to go back and pay taxes? Someone needs to pay taxes. If it's a freebie which is given, or someone needs to lose out on some credits, then that's something. Therefore, there will be your discount schemes, there will be your incentives, there will be price adjustments, there will be volume discounts. All of these are actually transactions or actually adjustments or entries which happen in a regular business. You have to really identify all these transactions and start preparing for these implications. Some of these may not have an implication, some of these will have an implication. Is this clear? I'm finding everybody is becoming a little tired in this discussion. Is it? You want me to go faster? Slow? Fine. Okay. And what happens to GAAP? Your generally accepted accounting principles. I'm saying that I need to pay my taxes on advance as well. You discussed time of supply. On advances, you need to pay your taxes, right? Are you going to account for it in your books? Come on. Yes?
Taxes paid will have to be accounted.
As a transaction. As a transaction, you're not going to account the revenue in your books because it's an advance which you have received. Right? Okay. Now, what did you learn when you talked about filing of returns? Sorry? You have to account for it? No, that's not what return says. The return provision says that for every transaction where you have a liability, you need to upload that data into the system with an invoice number. Correct? That means you need to generate an invoice for an advance. That means even if you generate an invoice for an advance, you need to make sure that it doesn't go into your financials. So how are you going to reconcile that? So it's not a simple matter of getting into an advance is taxable. You're going to obviously now have a challenge to say, I need to raise a document which should be a valid document, and then at the same time it doesn't go to flow into my accounts. And while that particular document is uploaded, when actually there's a corresponding invoice on that for against that advance, I should not really pay my tax on it, although it goes into my financials. So it's a huge challenge from an accounting perspective. When you're saying I need to pay tax on my supply of goods at the time of removal, right? That's a provision for goods. Is that correct? But then what about IFRS? Because IFRS is going to use very different instances to say what are your terms of the contract. If the supply is included only when the goods are delivered and tested, for example, then you are not going to really account for it now. But you are asking that you are going to have to actually document it, upload that invoice number into the GST network. So that's again a reconciliation you have. So there is an issue when it comes to, or it is planning required when it comes to really talking about your time of supply for payment of GST and your accounting and your financial reporting. Is that making sense? Either this is something too new, so you all are stunned, or this is really getting. It's a fact, isn't it?
Whether the company will have to make two invoices, one is the tax invoice for tax purposes and another for commercial invoice for accounting purposes.
Tax invoice and accounting invoice. How many invoice series will you keep? Then the tax manager will say double the invoice series required. So you'll have a new problem. So you'll have to figure out your memorandum record. Then how does that become a document to claim the credit? So again, that is going to be a problem when you plan for implementing GST. Because remember, now your whole liability gets governed by what you upload into the system. If you don't upload a transaction into the GST network, your output liability is not calculated. So if you say I have to pay tax, you have to show it as a transaction and upload it to GST network. That means you need to have a document. That means you have to have a serial number. So again, it triggers and takes you back. So again, that is something which you have to plan and look out for. Similarly, value of supply. Your value of supply again may trigger a repo or a issue, accounting issue. And other time and value both will come there. You look at an issue, or let me just give you two examples on this. Now we are suddenly saying you also have to pay tax on free supplies, right? Therefore, if I have to pay output tax on free supplies, I'll have to add that as a transaction in my GST network when I'm uploading the data. Correct? At the same time, in my financials, there is no revenue. So you'll end up in a situation where you say my financials are 10 crores, but my GST network is showing a turnover of 12 crores because 2 crores of free supplies. And therefore you need to then keep a RICO for what are those transactions which are standing in reconciliation. Because otherwise if you don't explain that, you have a challenge. And for this free supplies then you might also get into a valuation. So you have to say these are my 2 crores worth of supplies which are free supplies which I've added. Now you need to also do an arm's length valuation for those 2 crores worth of transactions. Because you don't want it to undertake an arm's length valuation for your full 12 crores of transactions. So again when you are going to plan, you're going to look into this aspect. To say how does this really get into your accounts, finance, reconciliations. You might have 20 different kinds of reconciliations required to be prepared for GST.
Coming back to my earlier question. Here in this case, output tax on the free supply. My friend's example about the pharma company. Any pharma company typically 10 to 15% of the revenue goes for the expedition of the doctors, leaves which are given to the doctors. Now, invoice number has to be given for that when I upload it as an output supply. And there will not be any sales invoice for that, normal for the supply of the medicines. So one has to have 2 different series of invoices, one for commercial invoice and tax invoice.
Okay. So let me respond to this question in a little while. Let me give you one more example. Will it be a situation that for every free supply which you make, you will not recover taxes from your customers? Yes? No?
Yes.
Not?
Maybe only the taxes, not the basic value.
So, I said taxes. I said taxes.
It will depend upon who my customer is.
It will depend upon who my customer is? Yes. So, we are changing. It's not that we are all not on this. So, there will be instances where you might make a free supply, but you are still going to recover the taxes. Let's take an example. That if I walk into a shop, I go into Shoppers Stop and they say I get a shirt free, they may still tell me that I will give you the shirt free, but you need to pay the taxes. So I'm going to pay those taxes. You might have a situation where you might be a manufacturer and you say you buy 20 television sets, I'll give you 3 television sets free because you are actually dealer in television sets. Now you know that distributor or dealer is actually going to sell the television sets. Therefore, if you charge him the GST, he doesn't mind really paying you for it because you get a credit. Right? Now, with that situation, you might end up having 3 kinds of problems. One, transactions when you charge for the value of the goods and the tax. Documents where you are charging no value of goods but only tax but you don't recover. And the third series, value of the goods, 0, taxes which are recovered. But you have to still upload all of these 3 transactions into the system. When you start uploading these transactions into the system, at least those transactions which are for your regular dealers, you might have to still give them a continuous series. So, will the government or the system allow you a separate series or 2 or 3 different series? That's not really sure. I'm not sure about that.
Sir, as far as the quantity discount, as far as the free scheme given to my dealers, manufactured to the dealer, if I'm giving 1 TV free against 10 TV free, so it's a 10 plus 1. Now my bill is like a particular rate multiplied by 10 TVs, a particular amount, and then I am supplying 11. So total quantity which is going is 10 plus 1. So my total value is for the supply of 11. Can it not be treated like that?
No.
This is what is suppose happening in case of pharma industry.
That is the way it's treated. Not so for the excise purposes, because for excise purposes,
not for excise purposes,
for VAT purposes. Yeah. That's a principle which is now going to undergo a change. And therefore, that brings us to a point that all your marketing schemes, your distribution, your marketing schemes will undergo a change. It is different to say, 2 for the price of 1, and it is different to say it's free. If you say, if the value of a goods or service is say 100 rupees, if you say 100 rupees for 2, that means something very different contractually as compared to saying 1 free on every one which you buy. And therefore, both of these treatments could be different because from a contractual perspective, from a supply perspective, and you might have to actually reject all your distribution and your fee schemes. In fact, you might, if this provision continues, you might very soon see that you will never find a box of anything which says, free so much. They will always say 2 for the price of 1, and those transactions will undergo change. So again, a lot of this has to be thought through. I may not have all the answers as of today, but we have to then implement it accordingly. Yeah, any questions?
Today, but transactional value concept
Yeah.
What he is saying doesn't fit into that. Transactional value.
Today it doesn't get, because it says sale. Sale means sale under the Sale of Goods Act.
New GST law, it says transactional value. MRP concept is gone.
Yeah.
So transactional value is that for 12 items and charging you 8.
No, it says transaction value, but then after that there are so many other caveats to it. There are so many sub-rules. There is clause 2, 3, 4, 5 or something. There are 3 or 4 in that particular rule itself. 3. Then you go to rule 4, rule 5, rule 6. So that all of it takes care of it. So it doesn't stop by saying we levy tax on transaction value. It expands the whole scope. The last one obviously is credits and costs. You already mentioned it. We are going to look at your credits. We are going to look at what is available, not available, what are your costs associated with your business. Well, finance and accounting never has it so easy. If you saw 5-6 items, there are another 5 or 6 of them which are pending. Now, one of the most important tasks which the finance and accounting will be doing is really identifying your key impact areas. And you can really, when you do an analysis for GST, identify what happens to the various activities on the transactions which you have and whether they translate into a P&L impact or a cash flow impact. Just to give you one simple example, you were paying octroi. When you go into GST, you are not going to pay octroi, and therefore it's a P&L impact, P&L saving, straight, right? Or you were actually paying, buying all your raw materials at 2% CST, central sales tax goes away, you are going to pay an 18% GST and you get a full credit. You have a double impact, a P&L as well as a cash flow impact. Cash flow, because instead of 2% you are going to pay 80, 16% differential. P&L, because the 2% which was the cost now becomes available by way of credit. And therefore, it will be quite critical to really identify what are the various activities of your business, transactions, procurement, distribution, and where are your P&L and your cash flow impact. In fact, I did an exercise a few years ago for one entity which had 3 different business streams, business product lines. One product line was a negative impact of 7 or 8 lakh rupees. It was an 800 crore company. There was another product line where there was a positive impact of some 30 or 40 lakh rupees a year. But the third product line had a 50 crore negative impact on account of GST. So obviously the company said, whatever is there for this product line A and B we need not touch. C is something we are going to look at. So immediately you are able to identify your impact area. You are able to identify which part of your business you need to look at and you need to focus on. Anyway, we don't have much time now. If it's going to be April, there's hardly any time. July, for a 1500 crore company, 2000 crore company, it's not enough. So you have to then prioritize and start looking at how are you going to first, ensure that your negative impact is mitigated, and then as you have time, you're going to then start looking at how, if I have a positive impact of a few lakhs, how can I convert that into a few crores. In fact, we have done some exercise for some companies and we have been able to give a number to the board of directors. This is the P&L impact, this is the cash flow impact. It's a complex exercise. In a large company, it takes you around 6 months, unless you can really automate it in a particular manner. But that is possible to be achieved. The next one, which tax, finance, accounting, your documentation. How do you need to change your documentation? For example, you no longer need excise invoices, so single invoice will take care of it. You save stationery. It's pretty simple, right? But there are lots of other areas which need to be documented slightly differently. For example, you need to be very rigorous when you are going to issue your debit notes or credit notes. Gone are the days where you could have an invoice and say, invoice for 1 lakh rupees, you will round it off and say, please pay 70,000 rupees. That's gone. Because you have to ensure that your vendor gives you a credit note for 30,000 rupees with taxes, uploads it into the GST network. So in your GST network, it will show 1 lakh minus 70,000 rupees is your credit. So your debit notes and credit notes become more important. They have to be uploaded, raised, uploaded, confirmed by the corresponding party, and that's where your work is going to increase. That's where you no longer can say, I rounded off the invoice, I made a change on the invoice and I paid. We always do that for contracting, right? We always do that for repairs and maintenance. That's all of the past. So your documentation changes are going to be severe. You of course Simpler documentation changes I did not really talk about is how do you raise your invoices, how do you contract. Contract is something we're going to have a separate line item, but how do you really have your reports, how do you provide your information to the network and all those things. Next is of course legal and contractual. Yes, please.
Yeah, in the case of a contractors, construction company, because there is always a measurement difference. Bill is actually approved for X quantity and now measurement for it is something different. So in that situation, is it possible to raise memorandum reports?
No,
once the measurement is final, and thereafter final invoice will be raised to avoid all these problems.
So it may not help you because you already discussed the time of supply. Time of supply for continuous service, and assuming it's a continuous service, it says the milestone or the work is done. So whether measurement can be a milestone, well, if you want to do that, you have to provide for that in your contract. And there's this old circular which they have said that measurement may be a good enough milestone for making a payment. Largely what will happen is if you want to measure, or if your vendor really measures or the contractor measures on his own, I think what will probably have to be done, and I'm not very 100% sure of it, but probably what will have to be done, you will have to ask the vendor or the contractor to raise an invoice, pay his taxes, and then issue a credit note for the differential.
So because it impacts no cash flow, that is the reason.
I understand, but I think better way to do this is going to be to raise this. I am not certain, but whether we can really take that. There was one circular of 2012 or 2013, I think, which talked about this measurement, to say that is a good enough milestone.
Continuous service supply that time.
Continuous service, there was that circular, which I'm not sure whether we can really take that. But even if you want to, one thing is very clear, you have to change your contractual terms. If you don't change your contractual terms, you are out. Then it won't happen. Okay, the next is legal and contractual amendments. Do you need to change any of your legal or contractual terms with your vendors, with your dealers, your distributors, your customers, and therefore you need to really get into this. Your long-term contracts, does it need to undergo a change? You need to identify this. There will be a lot of these instances where this is going to be required. Next is compliance and reporting requirements, and all your compliance or the next steps which are going to come is all going to be driven or largely going to be driven over here by compliance and reporting requirements. This team will really have to make a list to say what are these changes required, and therefore what does IT need to do, how do you change your documentation, how do you capture your data, how do you really upload the data, all of that obviously will come from this team, which effectively tells the whole organization what changes are required. And of course last is transition and rollover provisions, and therefore that's a big area. It's a one-time, but it's the most painful part of a transition. That what do you do with your closing stock? What is the provision saying of raw material stock in hand, intermediate goods, finished goods? What happens if your stock is with dealers? And if a proper provision is not made, you will see that on the 31st of March you will start getting goods returns. Or you will see a situation where your customers are going to stop buying goods from February. So first thing I have to all my clients, please go to the board of directors and tell them, don't expect super sales in the last quarter of 2017 or 16-17, because you are going to see a dip in your sales.
Entire March.
Entire February and March. If it's auto, you might see a larger dip. February and March, pharma, you might see 15 days. Sector, it will change from sector to sector. It's an analysis to be done. How do you really want to then? You don't want a situation where you're manufacturing automobiles and suddenly you don't plan your production and you have a huge stock which you are not able to stock into your factory. If you are not able to do that, you have to compulsorily move that on payment of excise duty, and then your credit is jeopardized. So again, you have to slow down your production. It has a cascading effect. So all of that planning is required. Now the whole problem is, maybe our clients don't realize it, but you will have to catch that you are the tax person. You need to go and sensitize your supply chain guy. You need to talk to your production guy, and then plan how we are going to really implement this. Let's look at some business processes. If I look at some business processes, and these are three I'm looking at: procurement, manufacturing, and distribution. If I look at the procurement side, first is you're going to look at the procurement model. How do you procure your goods and services? Is it local, interstate, imports? What kind of taxes do you pay? How how does it impact, what is your pattern of providing your goods and services? That's something which requires to be documented. You need to map it, you need to document it. And then of course, along with that mapping, you're going to really determine what is going to be your procurement cost, your net or landed cost of your goods and services. Again, that says creditable taxes, non-creditable taxes, reversals, all of that. Again, friends, what we are really doing here is just applying what we have discussed in the last 7 sessions. And it's not rocket science. We're just bringing this together at one place. That's all, right? So this is the next obvious thing we're going to look at. And procurement gets driven by credits and reversals. So where are your savings? For example, as I said, one key area of savings is going to be CST is not a cost. Offshore duty goes away. For a trading company, you suddenly get credits of service tax, and therefore that's a saving, and therefore your procurement undergoes a change. You might find that you are happier to buy from a more expensive source now, or a more organized source, because you might be paying more taxes, but it's also get those credits. Therefore, you might be able to build efficiencies into your business, and therefore that's where your procurement team is going to now start applying. In fact, in most large companies, the procurement team have been spending days together. In fact, in one of my clients, they started this exercise in June of 2015 to say which things, which of my vendors need to undergo change, how do I plan my procurements, what product contracts need to be entered into, how do I change my vendors, and all those things. There could be questions between imports and domestic procurements. Just imagine how it's going to change business for many people. Let's take a simple example of a Rolex. A Rolex is imported into India. You pay a 20% custom duty on this. When you sell the Rolex, you're going to pay a 12% or a 13% VAT, right? Now suddenly, when you're going to import a Rolex watch, you're going to pay an IGST or a GST, which is going to be available by your credit. Therefore, your 30% custom duty becomes 10%. Now, if 30% becomes 10%, my cost of Rolex goes down. What does it do to Titan? Titan will have to start thinking that what is the kind of competition I'm going to have. Similarly, is it really worthwhile for a manufacturing entity to buy certain raw materials from a domestic source? Should he still go for imports? So those comparable calculations will have to be done, because those kind of savings or benefits you can get from GST. So those are the challenges which you'll have. It becomes a challenge when it comes to distribution or manufacturing. It becomes an opportunity when you're looking at procurement, right? Then look at, true. Then look at make or buy decisions. Do I need to make something? Do I need to buy something? Do I move from a manufacturing to a trading? Do I give up my small items because it's equally efficient to buy from a third party? And therefore those decisions will undergo a change. And believe me friends, these are something which most companies are doing. Okay, they are already doing it. We sometimes don't realize it. But that's where we need to now tell our clients, this is what you need to do, and that's the value we are going to do for our clients to into this whole GST exercise. And then of course, intermediate supplies, we already discussed this. What is procurement? We need to start thinking about it. What is the cash flow implication for intermediate supplies? Of goods, services, how do you mitigate it? For example, you might really find that I don't want to I want to reduce intermediate supplies. Some companies may decide that. Some companies may say it's not really blocking my working capital. And maybe an inter-unit supply of an intermediate goods. Say I have a factory in Chennai, I have another factory in Gurgaon, or say in Jaipur. Now instead of making an inter-unit supply and blocking my working capital, I might as well directly buy from a vendor who will give me better credit terms. So if he's giving me better credit terms, why should I do an inter-unit supply? I just stop that business. I'll reduce those activities. So again, those are the issues, the questions which we need to ask. These are the questions we are going to ask our clients. We may not have the complete expertise in terms of evaluating the related costs, because then you will have cost of transportation, you will have cost savings on warehousing and so many other ancillary costs that goes into it. But that's the question we are going to ask our clients to get the right answer. Vendor alignment and negotiations. What are my vendors going to say? Just imagine, I'm going to now sit and find out, Mr. Vendor, you are supplying this component to me, you are going to make a 3% saving, reduce your price. My customers are obviously going to do the same for me, right? But that's something which I need to start looking at. Or I need to start looking at how do I align my vendors. If my vendor is supplying say for example, from his Maharashtra factory to my factory in Maharashtra, and he's also supplying something to my factory in say Lucknow, can I say stop supplying to Lucknow, supply more to Maharashtra? So what we call the share of pie, share of business. Do we need to really align this to make get some benefits, get some extra, some savings on raw materials? Of course, last is your transition planning. Do I need to reduce my stock of raw materials, intermediates? What do I do with this? So that's again a planning required to be done. Transition planning, rather, in many large companies, for transition you start implementing this by December or January. So you barely have time. Transition you have to start first now, in fact. Because you might have to do a lot of documentation starting, if you have an inventory cycle of 4 months, then you know what you buy in December is going to be stuck in on 31st of March. And therefore you have to start working on this in December. If you are having an inventory cycle of 1 month, it's a different matter. You start in March. But the longer the inventory cycle, the longer you are going to have to do. Right? Okay. Any other thoughts? Any other ideas? Yes, please.
So how do you see the integration with say IT systems? Just not for say the company itself, but including say the vendors and the
many businesses already have that integrated IT systems. Particularly you will find in large engineering companies and auto, where it's completely integrated.
But the vendors may be very small. Say the vendors for the auto company may be small because then they will also.
Yeah. In fact, in most auto, see in manufacturing, auto is the most advanced. In auto, most vendors are required to upload the invoice the minute they dispatch the goods. Okay, physical invoices are not really, they don't, of course they get it, but they only store them for VAT purposes or excise purposes. Otherwise everything is automated. So you will always have a vendor management system, what they call, and that system will take care of it. So that level of integration is there.
That will require a huge change, right? Bring in into GST.
Of course. So in fact that becomes a dual issue, because one, the vendor is now required to upload his data into the vendor management system of the company, and he also uploads it to the GST network, and that has to match obviously.
Vendor management they don't require. Once the goods come, they all these big companies.
Yeah.
They don't bother for the invoice also.
They don't bother for invoice because you have
Now they will have the challenge. Unfortunately, excise was never asking or checking at what time the goods are cleared and what time this auto companies are taking it.
Right.
And that is why the small vendors were suffering. But now this would undergo a drastic change.
Yeah. So therefore the cross-checking of your credits, your liabilities all is going to be much easier for the government. But let's move on. We have 45 minutes. We'll cover whatever we can. We can go on for 6 hours on this, or we can finish it in 30 minutes. So there's nothing hard and fast. Let's look at manufacturing. You will have to get the manufacturing team involved. The first obvious question: should I make or buy? Is there something I just want to move over from my own manufacturing to outsourced manufacturing, or do I need to change my method of manufacturing? Own manufacturing, contract, job work, toll manufacturing, trading, subcontracting, these are all the alternatives which are going to be available. And you will find that your tax cost on account of all these models is more or less the same. So if all of these models is more or less the same, then you have so much flexibility in the way you are going to do your business. So again, those are scenario building, what we call scenario building, where you say, I'm doing this, but if I do this, how does it change? And therefore you see what savings you get. More or less, I believe your costs are going to be almost the same, and therefore you have that option. What about your product mix and shifted demand? Lots of companies are facing this. That the product mix undergoes a change. I'm manufacturing a particular pharmaceutical product in my factory in Maharashtra. I'm manufacturing another product in my factory in Gujarat as well as in Assam. But now with the efficiency which we are going to get, it's possible that I discontinue Gujarat manufacturing, manufacture everything in Assam. Manufacturing, alternatively, manufacturing your goods which is closest to your market, so that because the distribution costs now are the same, it doesn't matter where you manufacture, where you sell. So manufacture closest to your market. And therefore that product mix of manufacturing can undergo change. And therefore that is something which your manufacturing team is going to look at.
That will also depend upon the exemption notification in respect of those notified areas, northeastern and
how does those
Himachal and
convert into refunds? Yes. So if you are still getting a substantial benefit, you're going to move a little more manufacturing over there. There, what will you do? and that's a brilliant point. What will you do? You're going to move your high value items to those areas and take your lower value items out. Because then you're going to increase with your high value items, your taxes go up and therefore your benefits increase. So that planning is going to come.
So what is likelihood of those notifications being continued?
They're going to convert to a refund. Pay your taxes and get a refund.
That's what I'm
That's the provision which is going on. That's very clear. There is no other way to do it. And we have announced that also. What is there going to be a shift in demand? Is there going to be a shift in demand? Your manufacturing team is going to be worried to determine your shift in demand. Television sets today are taxed at 31%, minimum 13 and whatever 7% of TROI. If television sets become 18%, will there be a change from say people will stop buying a 48 inch, they'll start buying a 55 inch, right? Because the prices are going down. So that's your shift in demand which will happen. And therefore, what is your product mix which is going to go? How does it change the whole business from what you're doing today to what you're going to see in the future? And again, this is all what we are seeing people doing. Clients are doing that, companies are doing that. And they are thinking 3 years into the future to say, today is 48, 55, 65. You know, I'm just giving you a simple example, how they are also extrapolating this. But that's the way they are evaluating the impact of GST. Your demands will undergo a change. So one client asked me that, well, if the prices for cars go down from 48% to 18% before we talked about the cess, or even 24%, then why should I buy a Maruti Ciaz? I can buy an Audi because it's still a 24% difference. And if 24% goes down, I'll not buy a Maruti, I'll buy an Audi. So again, that's where you're going to see how are you going to be impacted vis-a-vis your competition. Because you might see some impact on demand as well, right? Finished goods versus intermediaries. I think we already covered that. Obviously, transition planning. You're going to look at the transition planning is common, so we're not going to spend much time on it. Distribution is again very similar. What is your distribution model? Your pattern of distribution? Is there a direct sale model? Distributors, companies, warehouses? Do you need all of these? Can you collapse a few? Do you need to convert your CNF agents into your distributors? Do you need to convert your consignment agents into your distributors? So all of those will undergo a change because now it doesn't matter how you do the business.
Close down some of the branches.
Close down your branches. We had a client who said, I have 46 warehouses. I can bring this down technically to only 12 or 15 warehouses. Now he will not do it. But even if he reduces from 46 to say 30, he is still closing down 16 warehouses. What kind of savings is he going to have? And on the other hand, he will say, but now my 30 warehouses, where each warehouse is 20,000 square feet, now I need every warehouse to be 30,000 square feet. So there is going to be a different kind of a capital cost involved for him, right? Therefore, rentals are going to go up. For transport companies, those are going to change. Transport companies, the demands are going to undergo a change, and all of those business opportunities come up. Distribution costs. Where is the saving in distribution costs? Pharmaceuticals, advertisement and marketing, E&M, biggest spend for pharma. Big dispute whether you get a credit of that or not, right? I think all of you working with pharma might be quite aware of this. Huge amount of disputes. In GST, this goes away. If this goes away, then just see simplicity of how much money they are going to save. If they are going to save this money, how does it translate into your business or product? You reduce your price, does it impact your bottom line? That's the impact you're going to see. Cash refunds and credits, we have seen that. Demand realignment, same. How is your demand get realigned? We have discussed this. Pricing and customary negotiations. Whatever savings you make, are you going to pass on? Are you going to put it in your pocket? Will India have an anti-profiteering clause? You've heard of the anti-profiteering clause? Anti-profiteering clause? Okay. Australia and then Malaysia introduced the anti-profiteering clause to say if you make any saving, you need to compulsorily pass this on to the consumer on account of introduction of GST. Now therefore, if you make a saving and you're saving 5 rupees a unit and if you don't pass this on, they will leave a penalty on it. Now there are multiple ways in which this can be introduced. They can do a per unit valuation, in which case it becomes, either way this is a very difficult provision to apply. One way is to say you determine your costing per unit and say what is your cost, how does GST impact your cost, and therefore what should be the changes in the sale price. Alternatively, you do an analysis at a balance sheet level to say last year you made a 20% GB, suddenly you make a 25% GB. That means you had a saving of 5% which you should have passed on, and therefore the government will take away that money. So these are anti-profiteering clauses. There was a discussion which we had where they said we need to introduce these anti-profiteering clauses, but it's impossible to implement. Whichever countries implement, they have not succeeded in really implementing or getting the results out of it. But then you go into costing data, then you get into your per unit cost, then you really find out is it because of business efficiencies or is it on account of GST, and therefore how do you really say that my 5% was only for GST and it was not 3% on GST and 2% on efficiencies. You know, those kind of business, those kind of challenges can arise. And of course, customer renegotiations. All your customers will come back and say, Mr. So-and-so, I know you are making 3% profit in GST, please pass it on. How are you going to take care of that? You need to start planning on it right now. If you want to at least save 1% and then pass on 2%. Because he'll say, I know you make 5%. So again, that's something you need to look at. Distributor alignment and negotiations. Same way, on a distributor side, their savings. A distributor was not getting credit of the service tax paid on renting of his warehouse. Now he's going to get something simple. If he gets the service tax credit on the rentals, that means I want to capture it into my price. Therefore I say, Mr. Distributor, I'll reduce your margin because your costs are reducing. You'll still make the same amount of money, but I'll reduce the margin. Those negotiations are going to take place, right? And of course, last is transition planning. I think it's come too many times over. Let's look at IT. IT is probably the biggest area of impact. First is identify your reporting requirements. What do you need to report? How do you need to report this? And what are the reporting requirements and the data to capture? Now, what is about reporting? Reporting is very simple. You say, I already have so much data in my system, I need to generate more reports. No problem. You can easily do it in a month. But there will be a lot of areas which you need to start capturing additional data. For example, the system says that for every B2C invoice, which is more than 2,50,000 rupees, you need to print the name and address on the invoice and also upload that data into the system. That means I need to capture that information. The system says that the HSN code of all the goods need to be printed on the invoice and uploaded. That means for every line item of my sales, I need to have an extra field to capture the for the HSN codes or the service agreement code for services. Therefore, is that if that data is available, I need a report. If that data is not available, I need a change in my database. And the right hand side, which is change in my database, is the most scariest part because that requires a lot of changes. And you might have multiple systems. You might be a large conglomerate where you are doing manufacturing, you are doing trading, you are doing financing, you are doing servicing, and you might have 4 different systems which are really actually doing all these transactions. And you have to then start modifying all of these codes because ultimately all the data has to flow in. So that's a big area which needs to be taken care of. Gap analysis. What are your system capabilities? What are your system requirements? Your system development requirements? Again, very specialized field. And if you're a DISA, maybe that's something you do and you know. I'm sorry, I don't know how it's done. But this is what my colleagues talk about and my friends talk about, and that's where I picked it up. To say what's your gap analysis, what systems changes are required, what is your development requirements, and how do you really put that into effect? How do you change your system within a period of maybe 3 months or 4 months? Identify the systems which are going to be impacted. Well, you say it's a gap analysis. As I said, there will be multiple systems. In fact, I had one client who's having about 40 different systems which are being used in his organization. 40 different systems. And out of 40, they are saying about 12 or 15 different systems will not be impacted. The rest of them will be impacted. So that means they need to say in which system is going to be impacted, which requires a change, and develop what is called a BRD, a business requirement document. BRD is a document which a software developer uses to start developing his software. And that business requirement document has to be developed. That's actually a software people's job. Tax professionals normally don't do it. But that's what that tells you that in this program, in this module, these are the changes you need to make. And a software engineer will take it and start programming with it. And that's the level of information, that's a document which needs to be prepared if you want to really change your system and then start implementing. And obviously last is You actually start your programming and you do the user acceptance testing, UAT and the testing which you need to do. There also there is an involvement of the tax professional to say, am I getting the right reports? Am I getting all the columns? Is this in line with what GST network requires? Is it enough to really file my returns, upload my data? All of that's something which you will do all the time. Right? Yes. Next, human resources. A little bit of work for them. Everybody has to question, right? First, the human resources team has to really, this is in conjunction with the tax team or your tax finance and account. What are your compliance processes? What are your manpower requirements? So that's the first thing to be done. How are you going to, as an organization, going to undertake the compliances? Is it going to be a decentralized function? Is it going to be a centralized function? Is it going to be a regional function? If it's going to be a regional function, you need regional teams. Centralized function, you still need local teams, smaller teams, but a larger central team. So again, that's sort of planning which is required to be done. To say these are the activities, how many people do I require for all these activities, and that's a document to be prepared. And then obviously realign the teams. We have some people who are only in the factory, who are seeing excise, but they have never gone to the VAT level to say how do you really pay your taxes on your supplies, on your sales, on your services. You have people who are specializing in service tax. You have people specializing in VAT who actually are not doing so much work on excise, or they don't have too much experience on excise. And therefore you obviously first realign the team. So say if I have 40 people team in India, across India, and I need only 30 people, or I need the full 40 people, I'm going to reassign roles. I'm going to realign them to say who's going to do what. Then obviously start the team training. I will retrain everyone. And just as we are going to retrain not only the tax team, your marketing, your business, manufacturing, procurement, all of these teams are going to be requiring training. Because they also need to learn the new laws. They also need to learn, aisa karega to there may be an extra tax. By this way you could save taxes. So again they need to be trained, and of course addressing redundancies, reassignments and transfers. You might have redundancies, you might have to reassign some people to some other departments, you might have to move some people, because you will say if I have a large factory in say in MP, but I need only 2 people, I had only 5 people, so 3 people I can really move them to head office. Some people may be ready to move, some people may not be ready to move. How do we do that? And this again can be very disruptive if it's not properly addressed. So again, this is a challenge which organizations are going to face. And although we always take this last, this is something which you really should spend a little time off and at least start thinking about when you begin this whole exercise. So these are the kind of changes you will see, and I think we have covered pretty much large number of large number of functions in the organization. Your thoughts? I have a few more slides. It's okay if you don't take them. We have more or less covered everything. But now I want to hear from you. What are your thoughts? What are we missing? What do we need to add to these slides or this list? Can anyone share any of their experience, whatever you learned, whatever you maybe caught when you were discussing over the last 3-4 days? Some ideas? Unless I'm going to pick up people and make them stand up.
Our implement the same process for small scale and medium scale people who are single entrepreneur people and who don't have manpower, who don't have financial, where we learn to appoint or select as consultants. Because for major areas of the total 80 lakh entities which are going to come in, 70% are going to be small scale and medium scale guys. How do you get people and they don't even, so the whole challenge is becoming a very important challenge for majority of the people.
Absolutely. So that's where, as a professional, you are going to play a role. For example,
for that I tell you, it is impossible for me to work. As it is, I am working 24 hours a day. I am going by the day by day, I am living by the day. Tarikh pe tarikh hi karna hai mera. It is impossible for me to do any further work.
Sure. So there will be tools which are going to be available, and I take your point. It's going to be a challenge. But
majority of them are going to be
70% are, as you said, rightly so. These are going to be small or mid-sized businesses from a crore or maybe to 5 crores or 8 crores. You know. Now these businesses obviously are going to find it difficult. At the same time, let's bear in mind, they will not face a lot of these challenges we are discussing today. Because they may be single location, multi-locations, maybe 2 cities, 3 cities, not 20 states. Therefore, the challenges of implementation are a little low, which is one. Secondly, your tools. You might have the kinds of tally who are going to introduce their own versions of the GST compliant softwares, which will be able to really comply and may be able to hook up to the GST network. So that's an implementation which is required. The 3 which very small businesses are going to look at, they're going to see whether they can really work on workarounds. You know, workarounds to say, I don't go in for a detailed implementation of a software, I just have my mid-sized consultant or my trusted advisor, and here your consultant becomes a trusted advisor, where he just helps me with, helping me with my accounting, my compliances, my return filing, and therefore he plays a larger role in the business activity.
The last time you set up our own KPO.
Set up your own KPO. That's going to be sometimes necessary, because eventually when you really go into GST, what are we really going to find? You are not going to have majority of those challenges which you are facing today. Just imagine, if you are today going for an assessment of any of your clients, right? We spend 30% of the time while really getting the assessment of the revenues done. 70% is paid on credits and expenses, right? Now credits are automated. Everything is in the system. If they're in the system, you get a credit. Not there in the network, you don't get a credit. So 70% of the time really goes away. Maybe that still replaced by 10%, but 50-60% of the time is saved. And therefore, you're only then going to focus on your output. Are you capturing the output right? If you have 25 clients, might as well set up a 3-people team in your office who's going to take care of this output for your clients. Who are going to then download the dump from the system, do the reconciliation, and then have a report. Now, the SAP of the world is going to provide a batch, so is Tally. And Tally may be giving you certain features to take care of it. But all in all, what I'm saying is that the government is saying this is what everybody needs to do. Now, whether he's selling goods worth 25 lakh rupees or whether he's selling goods worth 25,000 crores, everyone has to do the same thing. And it's as difficult as it can, but that's the only way you can really integrate this whole thing. Otherwise, you will live in a world where there are so many distortions because you are seeing a small time guy doesn't upload, and it creates those distortions because somebody gets credit, somebody doesn't get credit. So when we have that, it's difficult, I completely appreciate, but we'll have to then just all of those things with it. Thoughts? None? Okay. So then I will move on to, yes please.
Sir, in the circumstances that they are saying that they will introduce the GST on particular iTunes or something like that also.
GST on?
Means applications that we download from iTunes or Android software or something like that.
They already introduced, right?
Yes.
Yesterday?
First in that particular circular that they have to, yeah. So in that circumstances, if a pirated means, don't you think so that piracy would increase in that particular, like no one will pay the amount for that particular subscription and
is the difference between a copyrighted product and a pirated product only on account of tax? No. The difference is not only that much, right? The difference is not only, for example, if I may say 12% excise or 13% excise will be plus 5% or 6% VAT. So today your difference on pirated is not only just 20%, 12 plus 6, it's actually much more than that. Those factors will continue, therefore piracy might continue. Yes, please.
The classification of B2B and B2C. In some cases, if I think that customer is B2B, and I classify him in return, I show that turnover in B2B, so he will get the credit. In some cases, I will show him as a C, B2C, so he will not get the credit. But in his return, he will show it as an input credit, and there will be a mismatch.
Correct.
So how means in every case we have to identify whether the customer is B2B or B2C.
Yes, you will have to of course identify. It's very simple. If your customer gives you a GST number, he is B2B. If he doesn't give you a GST number, he is B2C. So even in a situation where you know that you are, for example, selling to ONGC, who is obviously a registered person, but if they don't give you their GST number, what are you going to do? You say, sorry, I don't have the GST number, it's a B2C. So it simply goes by the GST number. Therefore, everything falls on the purchaser. The purchaser gives the right data, he'll get the credit. Purchaser refuses to give the data, he'll have to suffer. Now, if the purchaser on the other side sends a message to say, I bought from so and so person who's not uploaded my data, and you get a message, you'll have the ability to then rectify that particular data, re-upload that data, so that you deleted that transaction from B2C, added it B2B, and therefore the return number doesn't change, but the classification appropriately changes.
So, in the instant case where I change it from B2C to B2B, since may I get the data later on, the place of supply may change and accordingly taxes may change.
It may change.
So
you have to re-invoice that. Now, I don't know
taxes that I've already paid in, say, I put it, my location was in Maharashtra, place of supply, I put it as B2C and put it as CGST, SGST. Later on, I came to know about the address and everything, and it turns out to be IGST.
Correct.
So, what about the taxes that I've already paid?
So you have to make an adjustment. See what they're saying, and if I remember the business process correctly, there is no concept of a revised return. Therefore, you reduce that turnover as a negative when you upload the data. That return, that particular invoice which you have raised, you have to show it as a negative value and show a new invoice with the positive value. So you have to effectively do a reversal for that old transaction and add a new transaction, and that will take care of the adjustment. Next return. No, I think last discussion was that there will not be a provision for filing revised returns. I don't remember after there is a provision. I'm sorry, so far I've only reached reading the levy and the charge provision. I'm not going to procedures so far. Any other thoughts? We have a few slides which are talking sectoral impact. Now, effectively, we have all discussed everything. There's nothing new which I'm going to say here. The whole idea was to maybe just now classify some of these implications for every sector, so that if you are having clients which are working in some specific sectors, you can just maybe make an appropriate list. I'll just give you one example. You tell me whether you want to discuss this further, or you say, well, this is already covered, then we can close for the day or whatever. We can have some Q&A or a test or something of that sort. So look at consumer markets. For consumer markets, 3 or 4 points which you need to be careful about. Tax on stock transfers, we already declared. Discussed this. Tax on supplies without consideration, we already discussed that as well, and therefore there is something which we didn't look out for. Discounts and promotion schemes. This is something which you are going to have to look out for. Maybe we didn't discuss it too much in detail, but this sector has this particular peculiar situation of a discount and promotion scheme. So how do you really provide your discounts and promotion scheme? The law says that if you have a pre-agreed discount at the time of sale, you have to declare that on the invoice. You cannot give a credit. But if it is a pre-agreed discount, but which can be only determined or computed at a future point in time because of volume discounts or something of that sort, then a credit note is permissible. So again, a planning is required. Which instances you can allow a credit note, which issue a credit note, in which instances you may not be able to issue a credit note. So all these discount schemes, promotion schemes will go away. Impacts top lines of many business entities. Because for a business entity, what they used to do earlier, always raise an invoice for a gross value, then the very same day issue a credit